The most asked question I've gotten in the ICT community is how do you tell the difference between a market structure shift and a liquidity sweep? So this takes time to understand, and I've been trading for about 5 years now, and it's definitely taken me time to understand. But let me give you the overall gist of it. So a market structure shift looks something like this, where we create a higher low, okay, and then we break the higher low. Now I'm going to remove this line, okay, and when we create a higher low and then break the higher low, that means nothing without context. So in ICT, the biggest thing that you have to understand is there must be context around a trade. Meaning, if we get a higher low and then break the higher low in the middle of nowhere, you really don't know if that's a market structure shift or not, because you need to look to the left, you need to see where liquidity rests, and that's how you figure out if it's truly a market structure shift. And time will help too. In this example, you've probably seen this plenty of times. We create a higher low and then we break the higher low, but we end up going back to the high. So why does something like this happen? Well, it's simple. It all depends on liquidity. So for example, right, if we have buy side liquidity or we have some sort of equal highs where stop loss are going to rest and we kind of see a reaction over it like this and then break a higher low to the downside, chances are it's probably a market structure shift, and there's probably going to be a fair value gap that causes us to reject. If we look at this one right here, let's say we have not hit buy side liquidity. Well, a lot of times, if we still haven't hit that buy side liquidity, what will happen is we'll go down here. This will not be a market structure shift. This will be more of a sweep, and maybe we swap something right here too, and then we'll go back up. So it all depends on the question, have we hit liquidity or not? Okay, so that's the big question. So, for example, if I go into the market today, okay, we kind of saw this manipulation leg all the way down. Now, what happens here is if I just circle the highs and lows, we got a low, low, high, high, higher high. It kind of looks like this is a market structure shift because we created a lower low, lower high, lower low, and then higher high. But here's the thing, that's hindsight. You need to know the example and the context in live time to be able to tell that that's truly a market structure shift. Because in hindsight, it's very obvious that that is clearly a market structure shift, but we've already seen the move happen. So what are some things that could have told us this was going to be a market structure shift to the upside and not just a liquidity sweep to go lower? Well, if we look to the left, what I'm noticing here is there's a lot of liquidity we have swept right here and then right here. So to me, if I draw this whole range out, maybe on the 15-minute time frame from this low to this high, it seems like we're relatively low compared to the range. Okay, so here's our range we kind of got going on right now. We're relatively low. We kind of swept some liquidity. So to me, it doesn't really make sense to try to look for shorts that low in the range. So if I saw some sort of market structure shift, I would identify it as one, not a liquidity sweep, because it doesn't make sense to look for a liquidity sweep back to the downside all the way in this discounted area. So in this situation here, I could classify this as a market structure shift in live time, knowing that we're low in the higher time frame range and we swept this liquidity. So that's the first identification of how you know that's a market structure shift and not a liquidity sweep. Why wouldn't you consider this a market structure shift or break of structure to the downside? Well, let me tell you. Same thing. We're very low in the range. We're severely in discount. We've already swept this liquidity. And even if we somehow did keep going down here, I would still identify this as a sweep or no break of structure. I would not, even if we did go down here, I would never identify this as a break of structure because I wouldn't short this low, right? I need to see a sweep higher going back to buy side and then maybe a market structure shift. Okay, that would make the most sense to me. Okay, so see how down here in the range it doesn't make sense to look for a market structure shift here, and if it doesn't make sense to look for a market structure shift here to the downside because we're so low, it only makes sense for this to be a liquidity sweep. It's impossible to try to identify it as a market structure shift. Now, when we go back up and hit buy side, right, we create a higher low above buy side. This is where you're ideally looking for a short now because we hit buy side again and we're back up in premium of the range. We kind of made a higher low here, higher low here, higher low here. And then what happens when we break the higher low right here? Well, we just end up going down. We get a model to the short side of this fair value gap. Because we're now in the premium of the range, we're now expecting a market structure shift. You wouldn't expect a market structure shift down here because we're too low in the range. But up here, it would make a lot more sense, and it wouldn't make sense to get a liquidity sweep and then go up again if we've already kind of taken on a decent amount of buy side and we're high in the range. So in this example here, you can kind of see we hit buy side. We did get a little manipulation leg here. Okay. And again, you wouldn't expect this to be like a break of structure to the upside because of how high we are, right? And even if it somehow did work, let's say, you still would not take it because we're still very, very high. So hopefully that kind of makes sense. The other question I get is if we've already hit buy side and we get a market structure shift like this, and then we start going higher again, what happens then? Well, take the loss, right? Accept defeat. And look to the left of the chart, because most times that actually happens to me, right? Where we get what should be a market structure shift and then go up again. Most times it happens to me. I'm usually missing some sort of high the market's gearing towards on the left. So if that were to happen to me, I'd go to the left. I'd be like, okay, what am I missing? There's probably some buy side or sell side we haven't swept yet, which is why this wasn't a market structure shift. And then I'll kind of wait for that to be hit, and then I'll look for another one, if that makes sense. Also, a key time to reverse is 10 a.m. 10 a.m. is a nice reversal time. So if you ever see us dump into discount or pump into a premium of the range at 10 o'clock and you do see a shift in structure, often it can be high probability forming a silver bullet, which can be found in other YouTube videos on YouTube. Right now, what I'm kind of looking for is, one, we've kind of inversed this 5-minute fair value gap, which is kind of bullish. So when I go to the 1 minute time frame and I see all these higher lows being put in right here, right here, right here, to me, this isn't really a market structure shift to the downside. This is more of a liquidity sweep. Because why? Well, because the 5-minute inversed the bearish rate I got to the upside. So from common sense, it doesn't really make sense to dump here, which means it doesn't make sense for this to be a market structure shift to the downside, because we've already broken this 5-minute bearish fair value gap to the upside. As you all know, I only use inverse fair value gaps. And recently, I made a full free PDF of inverse fair value gap rating setups that I use to rate my own setups A through C. So if you want to check that out, just click the first link in the description. It's completely free and hopefully should help you. There will be times where we dump through a fair value gap, and it makes sense for this to be a market structure shift right here, because not only are we dumping through this low to be a market structure shift, we're also dumping through this fair value gap, which tells us we're probably going to deliver lower. So here and here. Okay. So it's just kind of using a combination of concepts to understand if it makes sense to get a shift. Same thing with down here. We're very low in the range. It wouldn't make sense to short here. Therefore, it wouldn't make sense for this to be a market structure shift because we're very low. We've already kind of hit this low. And the displacement as well. See how we don't really displace that much below this? That also tells me that that's probably not a market structure shift. Displacement's another key thing, right? This is more likely to be a shift to the upside rather than something like this. Right, if we get this, that's probably not going to be a shift. That's probably going to be more of a liquidity sweep, especially if we get like a wick over and then a body close back in the range. But yeah, those are the two ways I identify to see if something's going to be a shift or sweep. I'm not always right about it, but for the most part, I am. And if you're ever wrong, just look to the left. You're probably missing something, and that's that. Don't forget to use code DODGY for 80% off discount on Apex. Accounts are pretty cheap right now. Good practice. And that is it for this video. I will see you in the next one. Peace.